Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions like I normally do. It's generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me at _finance, and if you want to join our community, finding-value.com, where I go and dive deeper into these topics and subjects, looking for potential investment opportunities, and sharing that with everyone in the community. So, and we have a special coupon code. Special is the coupon code. Look in the description link for the specials, please. DMIM. So I started a position in TLT, which is bond, the 20 plus year treasury bond ETF. I'm in the camp that we could get a reversal move in it, correct, after breaking this downtrend, and yields could fall. But I don't think it's going to be a long-term trend. I think it's going to be a short-term reversal. So if I were to go into the US 10-year yield and just show you guys longer term what I think, and a lot of people don't look at this from the long term. I don't know why. And I'm a long-term investor. So I think we're going to go up, but yields, usually they move in waves. So this could be your first wave up, and then you could get a pullback like this to wave two, and then you get a larger third wave. This is Elliott wave, if you guys want to know, a larger third wave, and then you get like a fourth wave, and then a fifth wave. So I think something like that is coming, and it may not look as simple as what I drew there, but it comes in waves. So if we were to look at previous markets here where we kind of went sideways after a long downtrend, and then you come up in these waves. In fact, this is a kind of like a Livermore accumulation cylinder, and then we went up, paused, and then made a final peak. So that is what I think we are going through, is something, I don't know if we'll get an accumulation cylinder like that, but something like that is probably going to occur, and we could get a pullback. I don't think it's a trend change. I think it is a shorter term pullback in a big secular bear market in bonds. So yes, they could go up in the short term, but I don't know if I would put long-term positions. This would only be a trade. David Burrows says, I am the prize, low fund manager exposures, solid dividend growth, very little tariff exposure, and rock solid balance sheets, relative strength and breadth of percent of stocks and uptrends are showing no signs of wavering. By far, the biggest contributor to Q4 earnings growth in the SPY is XLF Financials ETF. Now, here's the thing. You want to look out the side windows and check out all of the other sectors. If we were going to have some big recession, what I would expect out of XLF is a move lower. This doesn't look bearish to me. It looks bullish. So whenever you get these downward facing consolidations and then you break upward, that's a bullish formation. And I don't see a necessary turn, at least not yet. In 2020, it was a small little move there in an uptrend. So remember, a lot of people, we're going to have this huge 1929 crash during this. This was the best time to buy and then to hold on to it. A lot of stimulus. Could something like this occur again? I mean, it's possible they could do something. But generally, before a slowdown, you'll see a move lower. This was in 2007, where the financials roll over and then the crash occurs a little bit after the financials roll over. They also rolled over in 2000. The financials did. And then the recession occurred in 2001. So the financials still look really strong here. I don't think we're going to roll over. It doesn't look like they're participating in this, quote, sell-off that we just saw yesterday. So I think it still looks good to me. But we'll continue to monitor it. Another piece of the capital rotation puzzle is falling into place as tech breaks down versus gold. This is technology versus gold. And again, whenever we get these breakdowns, that's generally the beginning of the commodity bull market. At the beginning of these markets, you're going to see a lot of volatility because money is going to start to shift and move differently. A lot of the times you might see strong selling pressure in the S&P 500 and the NASDAQ, which could also impact commodity equities because of margin calls and other leveraged bets, where they may need to sell and get out and shift money in the markets, which causes volatility. Now, if this does rotate and start to break down, that has been the precursor or the leader of these big commodity bull markets. So we did see selling pressure across the board in a lot of these commodity equities. And to me, I'll say this. If money's going to rotate, what they need to do is scare you out of the stocks to create volume that they can then go long in. But they need the volume for them to put a lot of money into it. So they need to scare you out of your shares. And trust me, I've learned that over the years. So I'm staying long, irrespective, because the underlying things that I look at that are behind the scenes, like technology versus gold, is breaking out favorably for the commodities sector. Rate cuts. So rate cut odds are continuing to go up. And that's what the market is pricing in, are the rate cut expectations. What have we heard? Trump wants lower rates. He wants a lower dollar. He wants lower oil. That's what I hear him talk about. What is Bissett talking about? He's going to try to get lower rates. What do you think is going to come? Rate cut expectations. Here we go. So if they're successful, we could see some volatility in the beginning of this. When they do this, he's going to launch inflation to the moon. I mean, that's what I think is going to occur. He's also going to launch the real estate market because affordability has been a problem. You can see it with low inventory, low selling, low home sales is what I meant to say, not selling, but home sales. I think that will all reverse if they get rates down to a certain level. Silver Fox says, do you think the big boys make money by watching financial media? Or do you think they make money by exploiting what goes on in your head while you watch financial media? I'm going to take it one step further. I think Jim Cramer tries to create demand for his buddies so they can offload onto retail. So basically, he artificially creates demand for him for his buddies to offload a bunch of shares to without affecting the stock price very much. I think it's okay to consume some financial media, specifically finding value on YouTube. But most of it that gets shown on a TV, yeah, I don't watch any of that crap. Silver Chartist. I like what Steve has to say here. He says uranium versus gold, using ratios to our advantage. Back in January of 24, when the uranium sector was on fire, he sold most of his U3O8 miners, used the proceeds to scoop up bargains in beaten up precious metal stocks like Agnico Eagle. I think that's how you pronounce it. The pendulum has now swung to the polar opposite direction. And I'm using the proceeds from profits just taken in gold miners to scale back into the oversold uranium sector. Uranium has underperformed gold for 13 consecutive months, an unprecedented feat from the data I can see. The key takeaway is conditions are ripe to consider taking at least partial profits in gold speculations and using proceeds to begin nibbling at oversold U3O8 speculations. There we are in this oversold. Now, some people are going to say, well, it broke the base. Time out, guys. This is going to be messy and things aren't going to be perfect. I think that this is going to go back up. I do. And I don't think we've got a bottoming signal yet, but I'm waiting for one. And I would start to acquire some of this stuff. Now, check this out. If you focus on the chart here, this is a double bottom here. Double bottom, draw a line going across here, and this is your retest of that double bottom. So if I were to draw this, and I don't know what he used, he said uranium, so probably URA divided by GC1. So that's uranium, URA versus gold. Nope, he was probably using UX1. I'm trying to figure out what he was using to create the chart. Yep, he's using UX, so he's using this one. So this is it on log. We draw a bottom here. So what this is a double bottom, okay? Double bottom. This is your breakout. And then your retest is right where we're at. If you were to look at like Stan Weinstein's technical analysis deal here, this is what it is. So, and I'm trying to help you guys out. I'm not, I've got the website. This is what I teach, but I'll help you guys out a little bit. Ideal buy for an investor, you've got the double bottom here. So bottom one, bottom two. You come and you break out, that's point A, and then you do a back test of the breakout that comes across here. That's point B. So if we were to look at that, this is your point A here is the breakout. Your point B is the back test. So I understand a lot of you guys you're saying uranium's bad, it's all this. I'm just going to make a point here. If you want to make money, the way you make money is you buy it when everyone has loads of dumps in their pants. They're scared crapless, and you do the opposite. That is how you make money. You don't do it by chasing the move. That is not what you do. You do it by doing the opposite. And I know that is really hard to do. So I would be looking for entry points here based off of a double bottom and then the return move to the double bottom, which technically is the ideal entry point. Now, do you just go high hum and just fling right into it? Not necessarily. What you could do is you don't have to buy into weakness. Wait for the weakness to subside. Wait for it to gain some traction and go sideways. Then start to accumulate. If you're aggressive, you can do a scale-in approach. You can scale in money slowly in small increments, and eventually you'll get a really good entry point. If the path were to do something like that, maybe the path bounces up like this, and you got some good shares there, and you just sprinkle in. There's no right, wrong way to do this, because in the general area of where we're at, if you were to use this, your bottoming pattern is stage 1. Your move higher is stage 2. This is a stage 2 increase. And what happened is we broke out, and now everyone is disbelieving the move. This is where you can steal shares. You can steal shares from all the people that have uranium in their name on Twitter that are all paper hand people. So, am I going to be on the prowl looking? Yes. Are we at the exact bottom? I don't know yet. We got to wait for signals. The momentum is down. We're waiting for the signals. If you're aggressive, I call it Sprinkle Fest. Sprinkle Fest 2025, small increments. Now, everyone gets so interested, like they need to be precise with this. Do 5% or 10%, something like of a position size. So if you do 5%, if you're going to put $1,000 in it, do like $100 increments. All right, that's 10% position sizing. If you're going to be aggressive, maybe you put in down here 30 or 40%, and then when it turns, you can add the rest into strength. Does that make sense? Figure out strategies that might help you get the best possible price. Now, even if this pulls back, it's still going to be a stage 2 pullback, and then I think we're going to do a little bit of rippy. But if you want to make money, you got to be aggressive. You got to buy when your gut's feeling like, man, I don't like this. That's usually a great buying opportunity. So coming on back, we've got the 5-year average product storage draws are 7 million barrels this week. Propylene will draw 3 million barrels. Crude will draw 3 million barrels. Other oil might show a small build of about 2 million barrels. Total liquids draw close to 10 million barrels this week. He's got a net result of minus 3.63 on oil with a big draw across the board. That does not seem recessionary to me, but or at least there's more demand out there than what we've been providing it in terms of supply, and inventory's been drawing. We are now at oversold levels. This is the tech bubble in 2000, and we're up at that area again for the S&P price to book. Price to book is the price of the stock versus the assets, the selling book amount that you could get for the company. And what it's doing is it's trading at a very high multiple of 5.19, which is incredibly high. A very cheap multiple is something below 2. I would say very cheap is below 1. 1982, you probably had a cheaper ratio than all of these. It would have been below 1. That's a steal. Right now, we're at very expensive location for the S&P 500. There's a lot of risk taking entry points here. That's what I'm trying to say. It's expensive. It's hard to make money when you're up here on the long end. Lumber jumps to its highest price since August of 2022. Wait, I thought we could be going into recession. The yields are dropping. Why the heck is lumber going up? Because we're not going into recession. I think they're in there doing yield curve control. I think they're buying up bonds. I think they're trying to push the 10-year down and get home prices up to make sure that the economy doesn't slow. That's my guess. Global oil inventories have fallen to multi-year lows. It says builds are coming any day now, but yet it's still way low compared to all of the other years going back to 2018. Recessions look like this. Well, that's a stoppage of the economy. But slowdowns, you generally get a move higher in you build in oil. We're real low right here. We're not building. Here's something that's really, really weird. All right. So try to piece this together. Conference board consumer confidence collapses as inflation soars. Now, I went into this. I just looked down at the inflation expectations. So it's this one here. So this is the inflation expectations graph. University of Michigan expected change in prices during the next year. It's going straight vertical. So if inflation expectations are going up and they're vertical, why is the long end of the bond market, why are bond prices going up and yields going down? That's completely opposite of what this is showing us. Again, I think they're in there buying it up. I really think they're doing that. And I think that's causing some havoc with maybe the yen carry trade and some other things. $100 oil's fair, lock it in. Trump's Iran choke cuts supply. Car giants bail on electric vehicles, gas is back. Buffett's Oxy play yells value. And OPEC Plus holds tight. Barrels are shrinking. Number 5, China demand roars, U.S. rigs lag. Oil's thrown, who's riding? So who's riding this bull market? I still think it looks good to me, and I know we've had some selling pressure here in oil. But again, we got low inventories. I think that people were probably scared with the interest rates dropping. Maybe there was a little bit of scare with how the yield curve's going up. So I don't know. I can't explain it. I think it might be the yen carry trade unwinding a little bit. Bruce Exonis, it says the big money is made during the stage 2 uptrend. Pullbacks towards the upward sloping 40-week moving average are usually good spots to go shopping. We increased exposure to 2 such stocks last month, did some buying last week, and added to another stock today. What he means by that is stage 1, stage 2, there's your ideal entry point. Pull back to this area. So that is for uranium versus gold. You can also look at URNM because that also, URA. That's your double bottom state. Point A, point B is here, and I was looking at it through the ratio chart. So everything is good here, guys. I know we're getting a pullback. I know people are getting frustrated. All I'm going to say is this, guys. You're going to have to ride through many 50% pullbacks for this bull market. You're going to have to get used to it. It's part of the game. Gringo Investment says oil positioning near these levels has typically led to a decent bounce. Might not quite be there yet, but close for crude oil on the potential longs. Peru Sexana says chasing stocks after big run-ups and panic selling after vicious pullbacks is not how one makes money in the stock market. Totally agree. The real edge comes from discipline, having a strategy, sticking to that strategy, and staying rational. Emotional control is the key to long-term success. We just saw good selling pressure. We've got the ideal entry point that we're roughly at almost in URA for uranium. And everyone is screaming like kindergarten girls. It went down. It's such a hard investment. I don't know what that was. I tried to do a screaming girl, but it didn't work very well. So I think it looks good. I know. People are going to say I'm crazy, and that's exactly the best entry points. URNJ down here, I think it looks good. I think we're getting to the spot where my spider senses start to, we're getting real close here in that circle here. So I like it. The Great Marti, I laughed when I read this, guys. I was laughing. Rule number 1, never bet against the Great Marti. Rule number 2, refer to rule number 1. Rule number 3, refer to rule number 2. Never bet against the Great Marti. And Bitcoin's pulling back. I know he's been calling for a top. I don't know if we're going to get a top in it or not. I don't know. I don't like it, but that doesn't mean that I can't be objective about it. And the reason I say I don't know is because if they're in there lowering interest rates, if they are doing what they say they're going to do, we could still see Bitcoin go higher. And I'm not stating that I'm in the complete bear camp, but we could see Bitcoin go sideways. We could see Bitcoin drop. I have to see it break down. So I'm not in the camp yet that Bitcoin is completely underwater. It had a pretty good move off, a pretty good bounce of off its, we'll call it off the bottom here. And I got to see if it breaks back. If we come back and roll over, then I'd say, yeah, it's pretty bad. Or if we break back above that, I'd say, okay, it might still have a little bit of a chance. Peru says yeah, I already said that one. This is a massive Bitcoin bear trap. Buy the dip. Could we be in the bear trap? I don't think so. I think we could roll over. It is a possibility. I know I'm taking a different stance here. On the one hand, I said, well, we might not be, it might not be a clear break lower. Now, I'm going to give evidence for the side that it is rolling over. It could be rolling over if the NASDAQ rolls over. So if interest rates go up and the NASDAQ does roll over, we very well could see Bitcoin drop dramatically. But here is the massive but. I think Trump and Vicente are in there lowering rates to hold this all up. If they're successful at lowering interest rates to a pretty good degree, we could see it go higher. So who's right? I don't know. I don't know who's right here. Because if they're in there monkeying with with the yield curve and doing yield curve control, who knows? But anyway, getting down here in despair, that's generally where I like to be buying. I'm not going to buy in the bear trap anyway. The Mag 7 ETF is looking anything but magnificent right now on this big move lower. Now, this could be the driver that pulls Bitcoin lower because the NASDAQ and Bitcoin are connected. They're interconnected. So that is something where we could see it pull on back. Government spending does not boost growth. It absorbs wealth. Totally agree. Government only has what it steals from others. It only has what it steals from others. So that they either steal it through money printing because we now have a non-backed currency, which is the root cause of the problem, which is inflation being the tax, or they literally take it from you and then create these jobs and tell everybody that they created jobs. But in order for those jobs to exist, you must take from someone else. So they're not really jobs. They are temporary placement holders for wealth destruction. Copy. It says gold priced in Bitcoin bottomed on the day that Doge took out US aid. What if Bitcoin only existed for US aid to launder money? Ooh, warmer. Getting warmer. Actually, that's probably a pretty good bet. Freight futures for dry bulk are up. Capesize is up 6%, Panamax down 1%, and tankers are up 3% for VLCCs and Suezmax flat. This is energy. Energy, despite all we can imagine, is picking up. We're going from lagging to improving for XLE, and hopefully we'll eventually get to the leading sectors. So this is all kind of leading back up. XLB, XLV, XLP or F. No, there's F there. And then XLE. So XLE is the energy sector. Found this interesting in Uncle Warren's letter. Buffett has been a net seller of equities for the 9th consecutive quarter. Yet the S&P 500 has been higher 8 of the past 9 quarters. Now, the one thing I'll say there is Buffett can't sell quickly. He's got too much money. So he needs to sell into strength. You'll learn that in the Reminiscences of a Stock Operator. Jesse Livermore did something very similar. The stock started going up for the stock that he was trying to sell for the company. And it was like published in a newspaper and everybody started buying and he was just unloading his stock into all of that, into all of that buying pressure. When you have to move large sums of stock, you have to do it over a longer period of time and you have to do it when there's volume. So I think that's what Warren was doing. Spain is up another 1% this morning as it hits the highest levels since 2008, and that's your weaker dollar. It's coming. This is the big move. The weaker dollar was back here of the last commodity bull market. We have a double bottom. We've got the ideal entry point of the breakout here, and we're probably going to get a retest before a big move higher. So Spain and all of these other ETFs are just currency exchange plays. Investment wisdom, it's more important to ensure survival under negative outcomes than it is to guarantee maximum returns under favorable ones. I think that's partially right, but I also think that you need to know what you're doing so you can oversize the bet early and then have the conviction to hold on. If you have no conviction, if you're just a chart trader, you're not going to make any money. I'm sorry, you just don't. Chart traders don't make any money, at least not large sums of it. And what eventually chart traders have to become are cycle watchers or fundamental, get somewhat into fundamentals and use the technicals. To make big money, you have to size up the big move. And it's very difficult to size up big moves with only technicals. And I think it's getting incredibly difficult because they continue to try to push things out of patterns all the time on both directions. So you have to have some sort of understanding of what's driving whatever you're in. JC Parrott says equities in Switzerland this morning are hitting their highest levels in the country's entire history. But this is also a currency exchange play. Weaker dollar. Weaker dollar, 2020 up to 2022, it consolidated in you could call it a cup and a handle. And then we're breaking to the upside. That is a currency exchange rate play. Currency exchange rate play. And then so are your commodities, like commodities and platinum and precious metals. They're all currency exchange rate plays. So if they get a weaker dollar with weaker interest rates, it's going to push all this up. Crypto's entering a bear market priced in gold. Looking at this chart, some would argue it never really had a bull market. It's already not too far away from the last bear market lows. The capital rotation event is why many altcoins never even had a bull market this time. And it's why the Bitcoin bull market was halted. So here it is, and we're potentially breaking down against gold. Here's the M2 money supply, the driver of inflation. It's heading higher. This is not, this is percent change. This was all the reverse repo money that was coming out, and now they're pushing the M2. And then it takes a little bit of time for this M2 to work its way through the system. Gold is reacting to this. That's the gold bottom in October of 2022. Now the money's going to start hitting the system soon. It takes about 18 months to 2 years to get into the system and start going. Remember that inflation expectation of that we went over earlier? It's coming. Jim Bianco says Trump measure of success is no longer a rising S&P 500. It is now a falling 10-year yield. Good luck and Godspeed. It is. His success is no longer the S&P 500. It's now a falling 10-year yield. And that's what Trump wants. And I think they're in there doing it. The dollar is going to drop too. And you're going to see all of these emerging markets start to rip. Vancouver guy says, if you interpret this, Trump is really saying, Canada, I want your oil, and I want your oil now. Maybe Eric Nuttall's right again about the Permian is about to start its decline, and they need a stable source before it becomes obvious. Yes, we already know this on the website. I go over this all the time on where I think the oil is going to come from. And it says, our country's doing really well, and today I was just thinking that the company building the Keystone XL pipeline that was viciously jettisoned by the incompetent Biden administration should now come back to America and get it built now. I know they were treated very badly by sleepy Joe Biden, but the Trump administration is very different. Easy approvals, almost immediate start. If not them, perhaps another pipeline company. We want the Keystone XL pipeline built. This guy's panicking, dude. There's a couple of things that Trump needs. If he lowers interest rates, he's going to moon oil. He needs oil badly. He knows it. This is what he needs. And where's it going to come from? There's only one spot in the world that you can get a bunch of heavy oil from. Yeah, this right here. Andy, I watched your YouTube video today, and you talked about the importance of zooming out and focusing on the big picture. This guy is a perfect example of someone who's looking at things blindly by not zooming out and noticing the bigger picture staring right at them in the face. And this is a silver spot 4 hour, which we could go lower. So here's something I want to make a comment on. This is all about time frames. I'm a long-term investor, so I look at long time frames. Short-term investors is a very hard game to win because you've got much smaller payouts, and the predictability, in my opinion, is less on the short term because there's more variables that can impact the price in the short term than the long term. The long term, and the reason I'm a long-term investor, is because the variables shrink. News does not drive long-term movements. It's the fundamentals and the valuations of the sector. So if I can buy something cheap with a good long-term pattern, and the good long-term patterns are generally much clearer. In the short term, this can go in whatever direction. I know people are trying to size things up. And what you're sizing is you're sizing the sentiment. Shorter term, it's all sentiment driven. Longer term is all fundamental driven. So what I do is I go look at the fundamentals, and that I then pair that with the valuations. And what you'll see is markets just move from overvalued to undervalued to overvalued in a cycle. And you have an opposite sectors that become undervalued when the financial sectors get overvalued. Right now, the price to book that we saw earlier in this episode here is overvalued for the S&P 500. So financial assets in general are overvalued. The undervalued assets are commodities. So they just swing back and forth. This guy looking at the short term, you're just pricing the short-term market movement, and I focus on the long term. Is it wrong for people to focus on the short term? I don't prefer it because it's harder to make money. Like Peru said above, your biggest gains come from stage 2. Stage 2, and I'm just going to use URA as an example. Stage 1 is here, stage 2 is here, and then you run. The big moves haven't occurred in stage 2 yet. Stage 1, where I entered, which is a breakout and a retest, in 2020, I purchased basically my uranium shares here. I've been holding the entire time. Now, people are telling me, these short-term market guys on freaking Twitter, they're telling me, Andy, you're wrong. We're not in a super cycle. I'm like, yeah, we're in super cycle. Right here, guys, super cycle. We're in stage 2, and they're too dumb to know that we're in stage 2 of a move higher. They're looking at everything like that. Oh, it's a big pullback. You're wrong. Guys, the bull market has 50% pullbacks all over the place. To try to time this and get it perfectly right is tough. Now, in April, so if I purchased here in 2020 and I sold here in 2021, depending on how this hold was, it might be less than a year hold. You're going to have to pay taxes. You're going to have to do all this crap on a big gain. You know what? I'm holding on. I'm going to sell it on long-term gains out in the future. Gold's okay, and I went over that last time. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special coupon code. Again, I'm a long-term investor. I'm looking for really good entry points, and I try to be aggressive as heck on my entry points to get as cheap a share as possible for the longer-term bull market. I think that we are entering stage 2 for a whole bunch of different commodities right now. URA was one that I showed. Copper is also entering. It's broken out of stage 1 and is in stage 2 already. Other ones are still in stage 1, like oils and other sectors like energy service, super cheap. Now, we're going to get a lot of volatility. That's part of the game. And you have to use that volatility to your advantage to get shares in the account if you can muster the courage to do it. I still feel those feelings. I still see accounts go down, and I don't like seeing it. But you know what? It's part of the game. I got to live with it, and then I go against it because I want to make money. And the way you make money is you buy when others are fearful. You be greedy when others are fearful. That's the whole saying. But that's what I've got for today, guys. Don't forget to give me a thumb up. Put some comments if you'd like, and we'll catch you next time. This is Finding Value.